I'm Josh Duvall, certified financial planner, chartered tax consultant from Duvall Wealth and Tax Planning. I'm here to bring you a couple ideas of tax planning strategies that you still have time to implement over the next 6 weeks or so before we reach December 31st of 2024. So again, these are tax planning ideas that you can still take advantage of if you haven't done so already. The first one is going to be your employer retirement plan. You have the ability to get your pre-tax contributions, or if you happen to be in a tax bracket where the Roth option makes sense, then you could do that as well. For most of my clients, the pre-tax item, the pre-tax option is going to be the most favorable. The maximum is 23,000 for your employee contributions. If you are 50 or older, you get an additional $7,500. But the item where most people don't talk about is the after-tax and Roth conversion that might be available in your plan. So first, you need to reach out and make sure, do I have enough contribution percentage to max this out, my 23,000 pre-tax limit, by the end of 2024? Reach out to your HR program, reach out to your benefits portal, and ask them about upping your contributions so that you can max that through the end of the year. The second piece would be looking at after-tax contributions. And if this isn't something you had time to implement, you could look at it for next year. You have the ability to add additional contributions, $46,000 of after-tax contributions that can then be converted to your Roth. So for high income earners that have lots of discretionary income, you can do the 23,000 and then add on the additional what ends up being 46,000 to complete the entire employer retirement plan savings that you have available for each calendar year. So that's a very important item. Again, that's your employer retirement plan, 401ks, 403bs, 457s. If you have 457 and a 401k, you can contribute to both. The second item that I wanted to bring up is your IRAs. So traditional IRAs and Roth IRAs. You have the ability to contribute $7,000 for your traditional IRA max for calendar year 2024, or an additional $1,000 catch up for those 50 and older. If you make too much money, then you probably cannot contribute directly to your traditional IRA. You can't get a tax deduction. And you might not even be able to directly contribute to your Roth IRA, depending on how high your income is. But you can do the backdoor Roth contribution. So you get the money into the IRA after tax and do the conversion to your Roth. Again, there's nuances here, there's specifics, but these are the things that we should be talking about from a tax planning perspective. If you want to look at figuring out ways to get dollars invested for retirement, take advantage of tax deferral, and for the Roth contributions, tax-free withdrawals in retirement. The third item I wanted to bring up was the HSA. And HSA is a health savings account. Most people don't use them, they don't know about them. But in reality, it's an extra tax deductible retirement account for folks who are high income. So after you reach age 65, you can pull the money out for non-qualified medical expenses and not face any penalty. You're definitely going to have to pay taxes unless they're qualified medical expenses. That's what the HSA is really designed for. The limits for 2024 are 4,150 for individuals and 8,300 for family plans. So it depends on your health insurance, but the money goes in pre-tax or tax deductible. It grows tax deferred. And if you have qualified medical expenses, you can pull it out tax free. Otherwise, at retirement, once you hit age 65 and get on Medicare, you can pull the dollars out without any penalty. So it's just like a 401k for higher income people. The next item I wanted to talk about was the SEP IRA. So a SEP IRA for folks that have 1099 income, that have small business income, that run Schedule C businesses or sole proprietorships, you have the ability to make, this could even be for partnerships as well, you have the ability to make contributions into a tax deductible retirement plan, which is called a SEP IRA. They're very easy to set up, very easy to administer. And you get 25% of your net earnings from self-employment. Again, there's some details there based on self-employment tax deduction. You'll have expenses for your business. You'll have qualified business income deduction. So it's not just the amount of money that you generate or the profit from your business. There's a little bit more that goes into that calculation, but roughly 25% from net earnings, up to that $69,000 limit that we mentioned earlier. So that's the SEP IRA option that's available to you. The other item that we should be talking about as well is going to be tax loss harvesting. So if you have a joint account, a brokerage account, an individual taxable account, it could be a Vanguard, Fidelity, wherever, it doesn't matter. If you have any losses that are in that account, You could sell those losses, and as long as you don't violate the wash sale rule, you have the ability to claim those losses as tax deductions up to $3,000 or to offset any gains that you've realized in the account as well. So, and that's across all of the trading that you do if you're single or married filing jointly. It counts for the entire tax return. So if you have losses, you can sell those positions and take up to $3,000 of a tax income reduction, right, which thereby reduces your tax. So those are kind of the things that are on the table for most employees or small business owners or contract workers that they could be taking advantage of before the end of the year. So you still have 6 weeks left. If you want to talk about any of those strategies or you want to learn more, please feel free to reach out. You can do so by sending me an email, josh@duvalplanning.com, or going to the website, duvalplanning.com, and booking a 15-minute introductory call. For clients, feel free to reach out via email or feel free to book that longer meeting and we can talk through these specifics with you. Thank you so much. I hope you have a great day and happy Thanksgiving. Thanks. Bye-bye.